Welcome to Luca is a Billionaire, where the only thing I invest in is your answers.
In this video, I will explain how to file agriculture income tax returns. First, you need to determine if your income truly qualifies as agricultural. This typically involves activities like farming, ranching, or forestry. Next, gather all your financial records, including sales receipts, expense invoices, and any other relevant documents. Finally, identify your correct filing status and begin to consider potential deductions that apply to your specific farming operation. The primary form for reporting farm income and expenses is Schedule F, which is part of Form 1040. On this form, you will meticulously list all your farm income sources and subtract your allowable expenses to arrive at your net farm profit or loss. Remember, if your net earnings from self-employment are $400 or more, you will likely owe self-employment tax, covering Social Security and Medicare. To minimize your tax liability, it is crucial to maximize your deductions. You can deduct all ordinary and necessary expenses directly related to your farm business, such as feed, fertilizer, and fuel. Also, consider depreciation for significant assets like tractors or barns over their useful life. Don't forget to research specific agricultural tax credits, which can directly reduce the amount of tax you owe, offering substantial savings. Once your return is complete, ensure you file it accurately and on time, either electronically or by mail. The filing deadline is typically April 15th, but farmers often have an extended deadline of March 1st if they pay all their estimated tax by that date. Always keep meticulous records for at least 3 years, as these are vital for any potential audits. For complex situations, consulting a tax professional is highly recommended.
Thanks for watching and please subscribe. It's the best investment you'll ever make.